All right, good morning. So I am in Puerto Rico. I got invited last minute and I decided to come. So here's the Airbnb and there's the pool outside and you can see the beach just beyond the pool and the palm trees and everything. So it's a pretty nice view to be trading from. They're playing Marco Polo in the pool, so I have to deal with a little bit of noise there, but that's going to be okay. Today, so far, it opened within it opened pretty close to yesterday's close. So that means to me this will probably be a trading range type open, and we'll probably be staying in this opening range here for the first 2 or 3 hours, is what I would guess. So probably going to be sellers above a bar like this or above here, and they'd probably be willing to sell more higher. Maybe a test of yesterday's open. So probably going to be more of a trading range open here is what I would think. But what I wanted to do was review yesterday's price action. So let me clear up the chart here. Yesterday opened with a big gap up. So yesterday opened with a big gap up, and the range that we got on the open was fairly small. Now I say that, and it's a 60-point range from this high to this low here. That's 60 points. So normally that would be larger than an entire day, but compare that to the days we've had recently, where the days are 1 or 200 points. So a 60-point range on the open is actually a fairly small range. And when you do that, when you compare the range of today's opening range to the previous few days, and if this range is small compared to the range of the previous days, there's a good chance this range is going to double. It's unlikely that this range will stay in a small trading range like this for the whole day. More likely, it'll double in size, and something like this. And then from there, it's a good chance that we'll have a lower trading range. So, and this is a point I'll make before talking about the other trades. So we had the opening range. The market broke out below this low, and when I saw that, I was sent out a message in the Discord that I was talking about how I would look for some kind of double top here, and then look for a test of the measure move down. And so we got pretty close to that. The market came pretty close to doubling the size of this range. And so this is all very common. Opening range is small, usually doubles, and then a good chance it'll stay in a trading range after that. So we came down and tested it, and then basically the rest of the day was a trading range. Now on the open here, we had several bull bars up. We got 4 bull bars. And after this big gap up, what I like to see is a test of the moving average or some kind of double bottom, and maybe we can get a swing up from there. So where would the potential bottom be here? Well, we have a bull bar here for a buy, so there's one entry, then a second entry is here. So after a big gap up and a possible double bottom here, so double bottom or micro double bottom with these 2 tails in the bottom, they are really going at it with the Marco Polo outside in Spanish as well. So I would be looking for a swing trade to buy above here. Here's one entry, probably not too good following this first bear bar, but then now you get in the second bull bar, and this is a second entry. So now we have a double bottom, we have a good looking bull bar, reasonable to go for a swing trade. I would not want to go for a scalp because I don't think the odds are high enough to be able to get enough reward relative to the risk. But if you're going for a swing trade, going for 2 times your risk, once again, your probability isn't very good, maybe like 40%, but the reward can be great because this might be an early double bottom and then we get a larger move up. Also, where are we double bottoming at? The green line here is the overnight high. So we broke above the overnight high, might get a test here and a second test. So we're double bottoming at support. That's a reasonable swing trade to go for there. Then as we broke below this range, like I said, I'm thinking that this range might double, and so if it's breaking out here, I want to look for ways to get short during like this pullback here, or maybe as the market's going down and pulling back. So that's kind of where your buying should be when you see this tight range like this. Well, I wouldn't call this a tight trading range, but I would just call it a small trading range. And once it breaks out, then try to get short during the pullback. Maybe go down to a lower time frame, like look for a double top on a lower time frame, or wait for a double top on the 5 minute here, or maybe find a wedge top on a lower time frame, like a 1 minute chart or 2000 tick chart. Either way, when you're seeing this pull back here and start to go lower, your idea is to try to get short and should try to get a profit target at least somewhere down here near this measured move. So that would be my game plan through here, is looking for shorts through here and trying to find them on a lower time frame. Because a lot of the time, if you're looking at the 5 minute chart, you know where there's a good chance the market might go, but it's hard to find an entry. But a good strategy is to use the 5 minute as a guide, and you can say, yeah, we're below the moving average now. There's a measured move target below. We're probably going lower. Do I go short here? You could. That's fine for a swing trade. So I'll mark that. Normally, like I said, I would wait for a double top. So normally I would not take that. If I did, I would try to go for 2 times my risk. But normally I would want to go for, I would rather get a second entry. But nothing wrong with taking that. And clearly, if the market would have came right down to you, you would have gotten your profit, and that would have been a good trade. But my point is to look for, sometimes it's easier and you can find more trades on a lower time frame. So if you're looking for a double top, you can find more double tops on a lower time frame, and you already can use this 5 minute chart as the guide. So that's a reasonable thing to do, is use the higher time frame as your guide and look for entries on the lower time frame chart. So I wouldn't look for any longs through here, even after we possibly met the measured move target down here. I wouldn't be trying to buy anywhere. So possible wedge bottom. Even after that, we've been below the moving average here. We'll probably need to come back and test these lows before going too far much higher. So I wouldn't be looking to buy anywhere over here. I wouldn't be wanting to buy above any of this. We didn't even really get much of a gap here. You have this high, market breaks above it, but then you get this big tail that pulled back, and that closed. So the sellers that sold above here, they were able to make money. So I would still not be looking to buy, because sellers are having too easy of a time making money if they can sell above that bar and scalp out here. So really wouldn't see any entries in here, but then the market never really turned bullish. They made a couple attempts to go higher here, but couldn't. Now we're getting a double top, and we're getting a bear bar. So I would see that as a short. And is it high enough probability for a scalp? I probably wouldn't want to scalp. I'd rather probably try to swing trade. You wouldn't have quite gotten the swing trade. So either you would have exited with a couple ticks of profit, or you would have tried to exit above one of these bull bars somewhere down here. So another point about trading a lower time frame is, as we're looking like right here, we can see the market pulling back to the moving average, and we want to try to find a way to get short. But there's really not an entry. I mean, you're going to sell below the bull bar, or you're going to sell down here. But if you're looking at like a 30-second chart or a 1 minute chart, there'd probably be some kind of top that happened right here. And then that way you could swing and be able to find more ways to get into the trade. So we've identified, yes, we're bearish. We've got this big move down. Bulls never really were able to push the market up, so now we're getting a double top. So it's probably still bearish. We want to find ways to get in, but can't find too many on the 5-minute, at least on here. So probably could find something reasonable on the lower time frame. After we have this move down, fairly tight channel actually. Really not too many pullbacks through this. So when you get a fairly tight channel like that, before the market really strongly is able to reverse strongly, you usually need to come back and test these lows. So that's another reason why I wouldn't want to try to be buying in here. I think people could argue for buying like above this bar or above here for swing trades, but me personally, when I see these gaps closing like this, when I see sellers able to make money, then that's what keeps me out of trying to buy. So what about the sellers that sold this close? They would have been a little bit disappointed with this and here and here. I can admit that. You could say, well, the sellers here aren't making much money. Yes, and I mean that does help the bull case, but the sellers up here are able to make money. Sellers of these bull bars are able to make money pretty quickly, and people that sold here, if they sold higher, then they could have gotten out at least break even. So the bulls aren't all that strong here, and usually after a break of a tight channel like this, then you need to see a retest of these lows before the market heads higher. So for those reasons, I would have stayed out of getting long there. Now looking at what the market's doing today, what it's doing live, we've had 6 bull bars up now, so that's good for the bulls. My concern is 2 things. One, like I said, we're now higher up in this trading range that we had yesterday. We'll probably run into some sellers around these highs. And I think the people that are selling here, they'd be willing to sell higher. So they'd probably be willing to sell 20 points, 50 points higher, selling like up at 5,500. So what I would expect is that, let's take this high where we're at right now. People that sell here, they'll probably sell higher above some bear bar that happens up here. So they'd have their first entry here, and either they may make money now, make money quickly, or they can sell here, sell more higher above a bear bar, then they would exit at their midpoint. So if this market does keep on going up, and later on, I'll see if that's what occurs, but that's what I would expect. So there's probably a lot of sellers here, and therefore, once you get a bear bar higher up, there's probably they're going to be exiting at their midpoint, and so that should show some proof on the chart. Kind of like this bear close I was talking about down here. So they sell this bear close, measure move. They sell here, they sell higher, but below this bear bar, and then the market comes down exactly to that midpoint, and they exit there. So this is the evidence that that's how they're doing it. And the bears were able to avoid a loss here, so that means the bulls were not all that strong. So 6 bull bars, probably going to get a little bit more up. But like I said, top of this trading range, we're going to be getting up near yesterday's open, so there might be resistance there. And then it's also on the open, so half of the moves reverse on the open. So I probably wouldn't be too eager to be buying up here. We're starting to get pretty far from the moving average. So I'm not saying like jump in and get short, but I would rather not be buying up here at this point. I need to see this breakout strongly up, and from there, then I would look to buy. But right now, I'm thinking we might just be still in this trading range. So I don't be buying high up in the range and far from the moving average like that. All right, so that's what I got. We're going to do some exploring of Puerto Rico this week, and we'll do some trading as well, and should be a good time. So thank you guys for watching. If you have any questions, let me know on YouTube or on Discord. I'll be happy to answer in either way, and we'll see you guys next time.